Welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you from the market site with Chris Engelbert. He's the Managing Director over at Barron Wealth Consulting, and we're here for the Registered Investment Advisor Monthly Review. We're going to take a look at some tax prep, and of course, we'll run through the major averages and some of the other asset classes on the charts. Chris, as always, thank you so much for joining us. And it's that fun time of year.
Yes.
Not only clients are getting ready for tax time, but so are the advisors. Let's talk about it through the lens of a client. How should we be prepping?
Well, the client really needs to prepare. We try to make sure that they have all of their information. One of the things that we tell clients to do is you should have really been beginning for tax season last year. Tax season comes on April 15th, and a lot of people, gather their documents and then they just like, hey, that's it. We're like, you've got to prepare for your taxes all year round. And one of the things that's happening now is all kinds of tax documents are coming to the clients. They should really prepare for their CPA by having all those documents in one place. Sometimes we get calls where people say, hey, I didn't get it. They've gotten it, they're getting it, or they're available online.
All right, now, from the lens of an advisor, how do you properly help clients prepare?
Yeah, I can't stress enough, obviously we're an investment professional. We stress to our clients all the time that they should be using a CPA, certified public accountant. We really think that unless you have an extremely simple return, that you should really be using a CPA. They can uncover a lot of deductions that you may not even have thought of. If you have some major events going on in your life, you've really got to communicate with your CPA. You got to tell them, hey, I changed jobs, I've got multiple W-2s, hey, we bought a house, we sold a house, etc. You should really be talking to your CPA before some of these big life events come on so that you can really be prepared and the CPA can be prepared at tax time.
Yeah, well, it's great. I just send it to my guy, email everything over, scan it, email, and within 4 weeks I get some sort of return, or I'm paying the federal government, hopefully the former. But I can imagine, particularly for advisors and other investment professionals, those frantic calls, the first, second week of April, and you want to be able to accommodate your clients, but they also have to be accountable for keeping track of their records as well.
Absolutely, Jill. One of the things that we try to do is we try to make sure we know who all of our clients are using as far as their tax preparer, their CPA, because what we really want to do is, obviously those people are going 110 miles an hour right now, but what I like to do and what they really get excited about, I've had some very interesting meetings after tax season. You call up the client and say, okay, you've gotten your returns back, let's sit down, let's do a phone call with your CPA. I'll never forget, I did one with a high net worth client a couple of years ago, and we talked about the income that this particular client had and what was going to happen, and we talked about some strategies. The CPA was very excited. In fact, after we hung up, he called me back to say that was one of the first times we've ever had an advisor really try to lay out strategy with a client and with the CPA as well.
And you know what, that makes so much sense for the advisor as well, because as advisors, you're always looking for different ways to network. This is it on a silver platter where you can grow your network and then it becomes a referral business as well. So this is a great strategy to increase your business and exposure.
Yeah, it really is. And what we try to do is we try to identify those CPAs that are best fitted for certain clients. So if a client's got a real simple tax return, we may use a CPA who's got a very small practice that they're doing. But then we've had meetings with some CPAs who do some very sophisticated tax planning. We're trying to get to know them. We're trying to let them know what kind of clients we have. And I have to say, Jill, we probably get 2 or 3 calls after tax season all the time. Hey, can you recommend somebody? Hey, is there somebody I should be using? And so it's a two-way street is really what it is. But the benefit ultimately is for the client.
I mean, it's interesting. When I started working a million years ago, I would do it with a pencil and the booklet that the IRS would send you. Now it's just beyond complicated, not only as things evolve with your life, but also with tax codes and so forth. So I think it's really key that clients keep their advisors and investment professionals up on everything they have going on.
Yeah, I have 3 words: strategy, strategy, strategy. Yeah. And again, so what we're trying to do when we meet with a client, after tax time, we're like, hey, bring in your tax returns. I want to take a look and see what you're doing. And a lot of times we see that clients have flawed strategies through no fault of their own. So for example, I had a client that was hoarding a lot of cash but wasn't making a significant contribution to their 401k, and we really had to educate them on the fact that if you made that contribution to your 401k, which by the way, the amounts that you put in have gone up this year, it really was going to benefit this particular couple as far as their taxes go. So it's really about strategy, and the CPA helps reinforce that strategy, but also the CPA can add additional strategies that obviously they know as well.
All right, let's take a look at the charts because a couple things have changed since we met. Looks like over the last 8 weeks, right?
We should never take a month off.
I mean, yeah, look what happens over the past 8 weeks. Well, let's take a look at the S&P 500 to kick it off. It's above the 200 daily moving average, and for technicians, that's a key level.
Yeah, it changes the picture. So obviously last year we were playing a lot of defense with our clients. We thought the fourth quarter was going to be bad. By no means did we realize it was going to be that bad. December was the worst month ever. There was a lot of artificial things going on in December we want to tell people about. Sometimes there's not a lot of trading by hedge funds, etc. But at the end of December, our indicators got as compressed as they were in March of 2009. So the first week in January, we were going to our clients and we're saying, hey, this is a very low risk environment. You got to get in. We were reallocating monies. We were very busy the first 2 weeks in January, and we are now up 17% off the bottom as far as the S&P 500 goes.
You know what that lends to? Staying invested and being diversified. I mean, you guys, this is your mantra.
Correct.
And so it really does lend to that. Now let's take a look at the Nasdaq comp. Clearly higher as the FANGs are rebounding.
Yeah, and we think there's some opportunity there as well. Last year, we were very concerned about valuation levels. Individual FANG stocks, as you've seen over the last 4 or 5 months, have corrected, and some of them very violently. They're now actually providing, we think, a good opportunity. So the Nasdaq's had a really good bounce. We don't think it's over till it's over at this point in time.
All right, now the Russell 2000, that's a little bit of an outlier. We haven't seen a bounce there.
Yeah, this has been a big cap rally. We think what's happening is that people are pushing, trying to get invested as quickly as possible. The Russell hasn't added, except in the last couple of days. Small mid-cap stocks have helped, but so far it's been all about the big guys.
All right, crude oil finally seeing some stabilization in this market.
Yeah, again, if you look at almost all the commodities, they've come up over the last couple of weeks. We think crude oil, we're hoping after the big correction that it would do some sideways trading to try to repair itself. It has, and sneakily it's been moving higher over the last couple of weeks. We actually think the surprise is on the upside for crude.
All right, now let's wrap it up with the 10-year Treasury. Looks like yields are going to remain a bit depressed there.
Yeah, we think that what investors should be looking at is a particular signpost. Everybody in the fourth quarter was worried about the Fed and how much they're going to raise short-term interest rates, and we think the Fed is acutely aware of the inverted yield curve, and oh my gosh, it's going to make a recession, it's going to come. So one of the things that we're telling investors to watch for is we really don't think the Fed's going to become active till the 10-year gets back over 3%. Right now at a 265, 270 level, it's a long ways to go. So we actually think one of the reasons why the equity markets are doing so well is they're kind of reading into the fact that the Fed may be on hold for the time being.
Right, but do you think there's too much optimism priced in at this point? Because what's the next catalyst?
Right, exactly. Well, we've gone from severe pessimism in the fourth quarter to now we are getting a lot more optimistic. We actually think what's happened, though, last year was that the 3 different sectors, the banking, the sector, the autos, and the home builders, they were all sold off like we were in another 2008. You know, we do believe that there might be a slowdown in the economy this year, but there was a lot of sectors and asset classes that were priced like it was 2008. And even if we are just a little bit better, which we think we are, we think the tax cuts are an ongoing factor that are going to kick in. And that was one part I was going to say in the first segment. A lot of people are a little upset about not getting a big tax refund. That's a mistake.
Right.
If you're getting a big tax refund, that means the government's hanging on to your money at 0% interest. You want a small tax refund. But again, back to your point about the economy, you know, we think that people are finally waking up to the fact that the tax cuts are permanent. The consumer is doing well as long as energy prices stay low, as well as interest rates.
And you know what? I'm thinking ahead already, the other segments that we're going to talk about going forward, but that's a great point that you make. If you're getting a smaller tax return, that means you have more in your biweekly, weekly checks, right?
Yep.
That's how it's supposed to work anyway. So an advisor and a client who's diligent should take that extra, let's say you get $50 extra, put that away. Why let the government hold on to it interest-free when you could put it away and perhaps get some kind of return on it, right?
You're correct, and what they should be doing is they should be pounding it into their 401k.
Yeah.
The couple of things, we've been doing a lot of 401k meetings the last couple of weeks, and the thing that we try to tell people, hey, we got good news and bad news. Bad news is you're going to be working longer. The good news is you're going to be living longer. And you know, people don't understand that you could be working well into your 70s. You have to save, save, save. And the 401k, they should be taking that extra money and putting it in their 401k.
I'm just thinking flash forward, sitting here for another 30 years,
I
doing
hope
that
so.
until my 70s. But I mean, even what we do here at Nasdaq, it automatically bumps it up 1% each year, and you don't feel that.
Auto
What is that,
escalation
a couple,
is perfect.
10, whatever, you know, $50 for every paycheck.
It's a great
you didn't
idea.
even think about it.
Yeah, it's a great idea. We're seeing auto enrollment and auto escalation are becoming two of the hottest topics, and we think that trend's going to do nothing but accelerate.
All right, Chris. Thank you so much as always. Who only knows what we're going to be talking about in the next 4 weeks from here. And thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.